Hey, welcome back everyone. It is time for another red hot cover call video. Now in this video, we're going to talk about a stock for which their ex-dividend date is about 2 weeks away. And we're going to talk about how we use a covered call with dividend capture. Now I sent this to the members and they're benefiting from this. But you can too, because what I say in this video is absolutely happening right now. So what I want you to do is watch this video and understand how we can absolutely double our covered call premiums through a covered call premium and a dividend capture. It's got to be a mindset. Yeah, I know there is not a doubling of covered call premiums. But what we're doing here is this. We're going to use a strategy for which I talk about in this video where we buy the stock, we look to use the dividend run in this S&P type company that is absolutely one of the biggest on the planet. And we're going to try to capture the dividend with a covered call premium and have our shares taken away. That's what we're going to talk about in this video. So I want you to stick around. I want you to learn how we do this, right? That's the key. Because at the end of the day, man, I come back and try to show you the world through my eyes. I try to show you ways to generate cash flow in retirement. Look, man, I don't have to do this. If you go to my Facebook page, and by the way, if you go to my Facebook page, what you're going to find in life with me is that I'm a motivator. I think you know by now I try to motivate you because look, at the end of the day, what is the money worth if we don't have our health? And to be honest with you, it's all about health and wealth, right? We want to make sure we have our health so we can enjoy our wealth. And look, you have to buy into that mindset. If you don't, then at the end of the day, you won't be motivated to do either. And you'll sit your ass on the couch and lose your health, and you'll never be motivated to do what you have to do to learn how to sell premium, dividend, invest. Look, at the end of the day, when you hope to retire, the bills do not stop, and you have to generate income in retirement. But look, you have to have your health so you can enjoy your retirement. So look, man, if you're 45 or 55, you need to step your game up. You can go to my Facebook page, John Greathouse. You see it right there. If you want to friend me, if you want to watch my life journey, how I take my health and wealth seriously. It's a mindset. Because if I don't have my health, then what the hell is the wealth worth, right? So we have to have both, and that's what I try to promote. I try to motivate, get your ass off the couch and get healthy. I want you to get off the bench. Learn the selling premium investment strategy and set yourself up for the future. Hey, look, in this video, we're going to talk about a great stock that I have bought in the past. And in fact, I own about 1,000 shares. Okay, so I have skin in the game. Now, whether I do this trade or not, I just want to show you or let you see the world through my eyes. Enjoy this video. While you're here, I want you to bang that like button. It lets me know you like what I'm doing. Subscribe to the channel because I'm coming back next week with an absolute killer cash flow video that I show to my members all the time. Okay, this isn't a sales pitch, man. You either want to be a part of what I do at the membership or you don't. Now look, if you don't know what my membership is, go to cptdashboard.com. It's in the comments. Go ahead and click that. I'm going to give you 1 free month. You get to take a peek over a active successful trader's shoulder, and you get all the tools and the upgraded CTP dashboard, the world famous upgraded CTP dashboard, where we find our next great covered call candidate. Yeah, that's right. We use the CPT dashboard to find the next great stock we're going to use to sell premium. Hey, look, enjoy the video. I'm now going to turn it over to him. He is going to bring this sucker home. Enjoy the video. Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today we're going to talk about Verizon because I see it as a possible buy shares, write a covered call trade with it trading at about $35.93. Now, before we get there, one of the things we talked about recently with a Money Monday video where I talked to you about how I was going to buy 200 shares for my daughter's account and then write a covered call. We talked about the dividend run-up, and I went back to that video and I watched it. And what I talked about was the potential dividend run-up that happens with great stocks like Verizon. And Verizon will have this period of about 2 weeks leading into an X date where Wall Street will look for stocks that have been beaten down, but soon will have a fat dividend. So they run up the stock to collect the dividend, and then that positive momentum keeps the stock elevated, and then they can exit the position collecting the dividend and the stock dividend rally. Okay, now did this happen? Well, I went back and I looked at it, and sure enough it did. I'm not here to pat myself on the back. What I'm here to do is identify stocks that will have a potential dividend rally. Now, this doesn't happen all the time, but I do notice it with the big S&P type companies because Wall Street feels very comfortable owning companies like Verizon who pay a fat dividend. They trade in a steady trend line, whether up or down. And right now, Verizon is trending down. I mean, Verizon to me is nothing more than a utility, right? It has all of its monthly data customers paying them, but at the end of the day, that's pretty much all they have, right? They don't have a Disney Plus service, or they don't have something that will draw in additional income. There's so much competition, and they're one of many cell phone providers. And they absolutely have an anchor tied to their ankle because they basically have to let all of these other little players use their lines. Now, yeah, they get paid for that, but at the end of the day, it's not that growth driver that causes Wall Street to just run the stock up like Nvidia or Tesla, right? They don't have much growth potential. And in fact, they might not even be growing. So Wall Street uses them like a utility stock where they ebb and flow, trade up and down. And currently, they're in a downtrend. In fact, I haven't seen them in the 50s in what seems to be a year. But with that said, we're going to use the stock. It's all about using stocks to ultimately get to the end game of generating monthly cash flow. That's all we care about. We don't care that it's going to go from 0 to 1,000, okay? That's not our game. Our game is to say, over the next 30 days, my money invested, can I make max profit? And max profit typically is 3% for 30 days. And if we can do that every single month, we're absolutely knocking it down, projected to make some 36% cash on cash. That's what I love about selling premium. We get paid up front. We win 2 times out of 3 possible outcomes, and we just have to stay diligent, right? While everybody's scrambling to buy, sell, make a nickel here, make a nickel there, we're steadily pocketing the cash, just like an insurance company pockets the cash when they have premiums to collect. See, at the end of the game, I would rather be the casino than the gambler, okay? Casino wins most every time. Now, getting back to this Verizon trade, I want you to look for those kind of things. If you see those great stocks, look at their charts. And if you see a fat dividend coming, is it trading in the lower 25 percentile of its trading range 2 weeks out? And could there be a dividend rally? Highlight that, watch it, revisit it. That's one of those things where you keep that little feather in your cap and you can go back to it maybe the next time it happened. Take advantage of things like that. That's why I'm showing you this Verizon pre-dividend rally. Yes, it was confirmed and it happened. We benefited from it. Now let's talk about how we can benefit right now. You know, I'm looking at Verizon and I would like it to be trading a little bit lower. But what I'm thinking is this, you know, we did have this sell-off right here. We found ourselves with the overall stock market, with the uncertainty of the Fed, everything kind of lost its support line, with the exception of some of the high flyers that are just breaking all-time records like Nvidia and everything. Look, we just have to not look at that noise, okay? We didn't catch the Nvidia run from 180 to 480. Okay, so just forget that. What we need to do is focus on the next 30 days and great stocks to generate that cash flow we're looking for. A lot of these stocks did break their support. And here was a nice support line for Verizon. Well, it broke off support and then it found a nice little spot under 35. Now, it hasn't traded under 35 in like forever. All right, so it's really getting peeled off here. And if you're an investor in Verizon, man, you just got to be kicking yourself that you didn't sell back when it was trading at $50 and $55. But hey, here we are, right? I own the shares. I could have sold them, but I didn't. Notice all the positive buying. This is what I love. They always go back to the great stocks when they're undervalued. Okay, Verizon becomes very undervalued down here, so they buy it. So what happens? We get this little catch of a rally with the rest of the stock market, and it's right back at 36x. And it could be headed to 38x because this is your next line of support or resistance. Okay, so we have broken that. And now the question is, can it get above 36? Okay, if it can get above 36, we're looking good. If it doesn't, it's going to dance around here. But 36 is the resistance number we're looking at. Wall Street right now is looking at 36. If they can get 36, it becomes a new sandbox for them. And that sandbox would be 38 to 36. Well, they got to get there first. This is where we would come in, buy some shares, right? We buy 100 shares at 35.84, and we write the 36 covered call, picking up potentially an 80-cent premium, which ultimately would give us about 3% cash on cash. We would get the stock move plus the premium. There potentially could be a dividend during this time. I want you to notice where we're at. July 7th is the X date, and they're going to pay a fat 65 cents. So here's the deal. Could this be the new dividend run-up? We're basically 2 weeks out. We're 2 weeks out from the dividend run-up. If I buy the stock at 35.83 and I sell the 36, here's what could happen. The stock could trade above 36, which would be great. We'd have our shares taken away and we make max profit on the stock move. We pick up the covered call premium. Now, here's the dance we play. Because we only have 2 weeks to the X date, and 2 weeks later we'll have the 30-day expiration date, the question becomes this. Can the stock get above 36 and clear our covered call premium of what looks to be about 55 cents? I just ran the numbers for a July 14th 36 strike covered call. Looks like you get about 55 cents. So let's do the math on this. The stock has to get to 36.55 for the most part for the call buyer to say, okay, I made the 55 cents needed to pay for the covered call cost to take this person's share at 36. I can now execute the trade, or on July 6th, they will come in and take your shares, not allowing you to pick up the dividend. Okay, they want the dividend. So the stock has gone above 36.55. The 55 cents covers their covered call cost to have the ability to take my shares at 36. They then assume the shares. The very next day, they get the 65-cent dividend and they sell the shares. Now for them, what do they make? They make 65 cents plus any stock move up or down. That would be up or down. They could lose money, but here's the deal. They get the 65 cents, and that's what they were looking to get. Although that doesn't sound like much. I know that doesn't sound like much. You're like, hey, dude, they made 10 cents? Look, when we're talking big Wall Street, they use millions of shares, and 10 cents is real money. It's just how it works, man. It's a numbers game. It's not oh, you only made 10 cents. No. Market makers work in the world of pennies. Wall Street works in the world of pennies because they use millions and millions of dollars. So don't think of it like, oh man, they would never do that. That's just a dime. Well, when you have 10 million shares, right? So you get my point. But we need to look at it from the same standpoint. Hey, look, man, we're selling premium and we want to collect that premium and we want our shares taken away. Now, of course, here's the deal. If it doesn't get above 36.55, right? The strike price is 36. If it doesn't get above 36.55, the call buyer might not feel they are profitable. And they might not want to take the risk of buying the shares. Because where does the stock go? right? Where does the stock go? I'll tell you where it goes. As soon as July 7th hits, the stock is reduced by 65 cents. So literally, they're holding a $36 stock. The bag is hit, and now they own a stock for less 65 cents. So what we're hoping is this. The stock does not get above 36.55, and the call buyer does not say, I want your shares. So we collect the 65 cents, and now it's a 2-week waiting game to see if they take our shares above 36. Remember, we collected the 65-cent dividend in this scenario and the 55-cent covered call premium. So now when we do the math, 36 minus 35.85, that would be the stock move plus the covered call premium plus the dividend equals $1.35. Well, how much do we invest? We invested, and we're going to divide this, we invested $35.85. Our cash on cash gain, if our shares are taken away at expiration July 14th, is 3.7% for one of the most conservative S&P type companies on the planet. Where are you making in literally 30 days 3.7% with an absolute snail of a stock mover? You're just not. This is one of those plays where we can actually collect the dividend, collect the cover call premium, and have our shares taken away because the stock doesn't move much. And boy, I'll tell you what, after that dividend is distributed, what's going to happen? The stock is going to fall back under 36, and you might have some Wall Street value hunters come in and buy it up, and it still finishes above 36. Now, this is all pie in the sky, but right now, this is what I'm looking at. And right now, that's a covered call with dividend capture that I think you should consider as well. Now, I have no skin in the game, and I really don't know if I'm going to do this trade. But if I were, this is how I look at it. And I do this with all of my covered calls with dividend capture plays. Now, before I let you go, what is the downside? Well, the downside is this, that the stock retests 34 while we own the shares at 35.85. So we're getting kicked in the nats, and we're going to have to play the waiting game. But while we wait, we collect the 65 cents for dividend, we collect the 55 cents in cover call premium. That, if you wanted to bail, is downside protection. So you could technically use that money, apply it to your cost basis, and not lose as much as a buy and hold investor would have lost. We don't like doing that because we use our premiums and dividends and stock appreciation to pay the bills. But if you're asking me what's the worst case scenario, that could be a worst case scenario. Of course, the stock could fall further. Look, that's pie in the sky as well, too. Look, I hope you're keeping your spidey senses on. You're always looking for that cover call with dividend capture when it presents itself. Remember, at the beginning of this video, I showed you the last time they distributed dividend, and remember, it was a dividend rally that ended up being confirmed. Will it happen this time? I don't know, but we are 2 weeks in, and this is when the rally could begin. And look what it's doing today. Markets are down, it's up. Wall Street is a snake in the weeds, and I'm telling you what, man, I love it that they might be running the stock up to ultimately grab that dividend. I can benefit today by buying the shares at 35.88 and doing exactly what I just explained. Hey, if you ever have any questions, feel free to email me. We're going to watch this. We're going to come back and revisit this trade 2 weeks after the X date and see where it went. I think it's going to be fun to see if it went up or down, stayed sideways. How much money would we have made had we done this exact trade? Hey, look, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.